Hello and welcome to IPO Access, a series of conversations on aspects related to IPO readiness. In many ways, preparing for an IPO is nothing short of a transformation. And empirical data shows that 9 out of 10 transformations fail. They fail due to lack of planning or follow through on execution. To unpack this, I have with me today someone who's seen this in its multiple dimensions. Deepankar, welcome to the show. Deepankar is one of our senior partners with over 3 decades of experience on various aspects of consulting. He's also been on the other side with a large financial services business. He held a very critical role at a very critical stage in their growth journey. Deepankar, again, it's a pleasure to have you here. And let me just dive into it straight. While we say getting ready for an IPO is a transformation, are there specific dimensions or aspects that you would ask companies to consider when they're going forward with that journey?
Yeah. First of all, thank you very much, Karan, for having me join the podcast. Really appreciate that. Yeah, as you said, is there more considerations? Often I've found people want to, or they think about an IPO as giving as an exit, for example, to the private equity investors, or saying, okay, we want to raise funds for expansion, all very legitimate reasons and should be. But in many ways, those are outcomes of the IPO journey which you are doing.
Yeah.
Why I think so you want to do an IPO is really to put yourself out in the public domain and say, I am ready to operate at the highest level of transparency. And I want to do that by raising capital from the public. Public has a trust in me. And that is why I think so one should think about an IPO. There are many ways to raise funds if that's what it is, or giving an exit to private equity. There could be a flip. You can raise funds from banks. You can raise funds from other private equity, HNIs. There's so many options available otherwise to an organization today.
But I think the fundamental building blocks for whether you want to raise money from private investors or in the public markets are very similar. And I think I've often found that while companies think of these aspects, a lot of them end up just ticking the box. And you could do that and possibly still attract capital. And then we're talking about IPO, so you could attract public capital. But I think we have enough precedents where there have been failures. There have been, I would say, corporate mishaps. You haven't been able to sustain valuations or investor interest. And again, I go back to this whole aspect of transforming yourself to be ready for external scrutiny in this case.
Yeah, so Karan, short answer is that you need to start thinking about your transformation journey the day you decide. Let's say first as the management, not even going to the board, really as a management that I want to go for an IPO. As I said before, going for an IPO itself is a huge decision in the life of a company. And I think so it's a great decision, by the way. To me, it's a natural progression for any organization because it puts you out there in very different ways, as we talked about. Now, when we say you start thinking about it, you start thinking about transparency, you start thinking about governance, you start thinking about what is it I'm going to say and do. The fundamental difference which is happening now, earlier you had money, your own money, as a founder or a promoter, or you had money from a few people, investors, whose horizons, whose outlook, whose decision making was very different to versus once you do an IPO, you are now putting yourself out as a custodian, trustee of money.
Public money,
Public money, and not only of the current shareholders, but any and everyone out there, because they will see things and determine or decide to invest or to exit the company based on what you're saying. So that transformation journey starts, to my mind, when you think of an IPO. I think so filing of a DRHP, getting your bankers, actually doing the IPO, all those are stages in that journey. But if you don't start then, and then it's a tick box. For example, let's take one of the requirements, you must have a code of conduct, whistleblower policy, and everything else. Well, all I need to do is write a prompt, give me, please set up a nice whistleblower policy for me.
There you have it.
There you have it, right? But does that really pass the test of imbibing what is said in that policy or not? And that's what is needed as an example.
No, I think you hit the nail on its head. It's very easy to put a lot of this in place, but really to allow it for it to be effective and to be actionable, I think it needs to be disseminated across the entire organization. It usually starts with tone at the top, but the time and effort that you need to evangelize these changes, it's almost a cultural transformation, right? You're basically shifting gears to being accustomed to a lot more scrutiny from a lot many more stakeholders. And if you delay this till the time that you are really, getting close to that time frame we spoke of, then you're not going to be able to affect a lot of this, right? You might put it in place in form, but the spirit of what these requirements are will not really be effective.
Yeah, so I think so, of course, fatigue can set in. There are too many IPOs coming in, and if the market, once they'll list, don't react well to them on listing.
Well, that's also happened, right? A lot of new age companies especially.
That will happen. And it's all about a percentage, right? Sometimes, frankly, disclosures are made, fully made. The investors don't really read that. And they're only saying, hey, Karan is telling me, great IPO, invest in it. A good IPO, to my mind, will always do well. I think so. If you have a good, real, strong story to tell, I think so you can always command a premium in the IPO market, and it will be there. Your second part of the question, I think so there are so many advantages of listing out there, as I was saying earlier. Apart from governance and controls and all those things, to your vendors, to your partners, you are sending out a signal.
Your customers,
that I am a company which holds itself out for any sort of scrutiny. Which, if done properly, and I'm assuming everyone will do that because that's why we have regulations and all that, it gives the other side the confidence to deal with me.
I think a lot has been said and will continue to be said about boards and their effectiveness, and especially the role of independent directors, and recent incidents notwithstanding. That is an area that continues to receive a lot of I would say scrutiny. My question is slightly different, related to that, but slightly different in the context of how do you see independent directors being able to play a more effective role in enabling a company to build this confidence, right? And again, keeping in mind all the constraints that an independent director may have, the limited time that they get with the company. They are obviously subject to what the information that the company provides them, to be honest.
Absolutely, and rightly so, because the onus on them became also very different. The obligations on them became different. Now they were the trustees of that of their public money, effectively, as the board. Right. Now I think so. Some things which good independent directors do is that they will study the papers, whatever they are sent. Sometimes companies are smart and they'll send them 100 pages instead of sending, just presses or something like that. They have to say, sorry, you need to send me something more. They have to stand the ground on some of that. Also, I think so, the good independent directors, I find, are spending time outside the formal meetings to interact with the people in the company. So for example, if I'm on the audit committee, I will spend time separately with the finance director or the CFO. I will spend time with the internal auditor separately, with the statutory auditors. And whoever else I may feel, I may even want to spend time with the CEO separately, as audit committee, as a audit committee chair, because I want to understand their perspectives. on issues like transparency, on issues like what will you do when, let's say, a fraud hits you,
Yeah.
right? How will you react to it? Just their answers will give me a sense of the mindset. And the day you start thinking of an IPO, I think you start putting the building blocks in place.
Yeah.
And having a good board is a key building block. So I would suggest once you say an IPO, I'm not saying your current board may have not been good enough or something, but it was for a different purpose. It's all my money. For example, let's say as a promoter, I have 90% of my money,
Yeah.
right? Then my board could be pretty much it's private money. It could be who will support me in my growth phase,
Yeah.
rather than advising me how do I operate in a public space, right?
Yeah.
So that time I would
Different
want to make
context,
some changes,
yeah.
right? And then they are there with you. I think so. As I'm going through the journey, having regular meetings with those independent directors or creating a committee who will advise me on my IPO journey. I think so. From an independent director's point of view, how they act and behave
Yeah.
when a crisis happens post listing, as your list, I think so also is very critical.
Yeah. Yeah.
And the role of, I think so, company to my mind gets judged in a big way how they behave and act when a crisis hits them.
Yeah. Yeah.
And that will then build trust or diminish it based on how the company has reacted to it.
Yeah. Again, you've done all the hard work and you've gone and rung the bell, and there you are, you are a listed enterprise now. And I think that's when the reality hits home, right? That, it's not the end, it's actually the starting point of a journey where you're now in the floodlight, virtually in the floodlight. Every action, every decision is going to be scrutinized, sensationalized, if the external world does not like it. Accidents get blown out of proportion. And again, I just want to double click again and possibly have you reiterate some of your experience in terms of, again, best practices on what will set you up properly for this. And keep in mind that as you know as well as I do, that it's a moving target. Your regulations are changing. The world is changing every day.
Yeah.
There are external constraints.
Yeah. So to me, I think so. I like to frame it in terms of, once you're listed and a crisis hits you, crisis could be anything, could be a financial issue. And that's the time, I think so, the mettle of an organization is tested. How do you deal with those crises? How transparently you come out with that? How are you showcasing your remediation measures, right? My experience has been there have been a whole bunch of companies, I don't want to go to the regulator with this.
Yeah.
I'm going to get slapped, and not only slapped in my wrist, the guy will shut me down, blah, 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 everything else. My experience has been to the contrary. I think so, of course, there's a time to do that and the way to do it. But going to the regulators in good time, talking about your challenges and issues,
it's a lot more constructive, I think.
Far more constructive. I have found regulators being very receptive, by and large, and helping you address.
Yeah, they're equally invested in not letting you fail in a lot of
Exactly,
instances.
right? I feel that, were there people in the organization who could have done what the consultants?
Oh yes, absolutely. I think,
right, and much more passionately invested in many ways, right? But the reality is that we all had our day jobs, and you needed another set of people to come and look at it. Then you say, okay, for me it's the first time and probably the only time.
Yeah.
I'm not going to go for an IPO.
Yeah, it's a once in a lifetime, right?
Right, but let me get people who do this as a day job.
Yeah.
Because what they can come, look at my company, and they were seeing that, and they were saying, yeah, I think so, you need to put this out at least, or you need to, so I'll give you a practical example, right? I think so there was a big challenge about explaining a business model. And I think so consultants also helped us in many ways. And we really laid it out plainly and squarely what our business model was.
Yeah.
Right? The value was by way
And the way I look at it, the cost of not succeeding is far higher.
Absolutely.
Again, you only do it once.
you can't,
the cost of repairing something, if it goes
such a high profile IPO. you can't afford it to bomb.
Yeah,
okay,
yeah.
it's not good for the markets. It's
Yeah.
not good for the
Not for
company
yourself.
cost,
I mean, forget the
right?
market,
And
yeah.
I think so. At that point in time, better to be safe than be sorry.
No, I completely agree. But the second part of my question was perhaps more provocative. That there are founders, there are promoters, there is management, there's professional management. Not to suggest that founders and promoters are not professional. And then there is the external agency of independent directors, who are more, let's say, fiduciary and relatively unattached in a way to the company. My question is more again on the acclimatization and the timing of some of these things when a company is on its way from it's growing. Let's assume it's a growth enterprise. It's on its way again to make the shift from being a private company to a public company.
Okay, to me, that has nothing to do with when I decided to even do an IPO.
Yeah.
That is like,
And that's when you take in the spirit, right? That
Yeah,
you're using this to
so-
build the organization.
yeah. So I'm building I'm a promoter. I want to build an organization which is absolutely transparent. It is the culture of that organization. I've defined what a culture should be, and I stick by that knitting. Whenever IPO happens.
Yeah.
But this is just my knitting.
Yeah.
And that's what I stand for. And I think so the management and everyone else is all part of that knitting. And I think so we all operate in that particular way. There are certain fundamental do's and don'ts. The second part is that as you're maturing as an organization, then you start saying, okay, what next? And once you get to a size, even if you're a private company, you still may come under scrutiny.
Yeah.
From the regulators, because you are becoming critical to the larger ecosystem. Then honestly, you jolly well operate as if you're listed. So
Yeah.
then for those companies on you there, then that journey becomes a bit easier. But if not, then as you start thinking, we're talking about the IPO, as I said earlier, as you start thinking about an IPO, you start thinking about directors, you start telling the management, you start telling people below. You may want to formalize some of these things in terms of, okay, let's bring in formal training for all our people, let's say on code of conduct,
Yeah.
on a thing like POSH, on a thing like insider trading. So you formalize some of that, which was hitherto a bit more informal, a bit more like just culture related,
yeah.
right? And that's how you do that. Then you have your directors, you change that, and so So I think so. It's a continuum which you start, and if you don't get things right when you are right in the inception of your organization, i.e. the values and everything else, just because I tried to do an IPO and I want to change
not gonna change
colors,
the world, yeah.
I don't think so that is going to happen.
Yeah. Dipankar, thank you very much for your time. I think I really enjoyed the conversation. And for our listeners, I think the takeaways are very clear that this is not something that you can keep if you're looking to go public and just be a better governed, scaled up organization. You have to plan for yourself what is the right time to bring in some of these changes. You have to prioritize and then execute. With that, we'll end this episode. Thank you very much for listening in, and we'll see you again on future episodes.
Thank you very much, Karan, for having me.
Thanks, Dipankar.